Welcome, everybody.
Topics from the IMF. They say they're continuing to push for reform of Argentina's tax system.
I'm just setting things up here. Could you please let me know that you can see my screen and hear my voice okay? Welcome, Victor. You're the first one in the room. Good to see you.
Hi, Giles.
Oh, good to see you, Victor. Welcome.
Yeah, yeah. Thank you.
Victor, could you let me know if my screen and my voice is coming through okay? Can you see it all right?
Yeah, I can hear you,
Oh,
and the
that's great.
screen
Thank,
is
thank you very
yeah,
much, Victor. That's always good to know.
yeah.
I'm going to give folks a few minutes to sign on in, then we'll start the webinar. Um, Yeah, I'll wait before I explain. Just gonna see. I think someone's got a problem joining in. Okay, Victor, let's get going. And if anyone else joins in, I will let them in as we enter. Okay, so this is a really important lesson, and at first sight, it seems very sort of easy and straightforward. But don't be deceived. Even though this is a relatively simple concept, some of the best trades I've had in my trading career have come from very simple trend line breaks. So they're really worth paying attention to. And what I've titled this is How to Use Trend Lines in Trending Markets. So this is a very specific example when I'm going to show you how to use trend lines. And it's when markets are trending quickly and you're thinking, how do I get into the trade? This is going to help you. And I'm going to give you a tip of how to set your stop loss as well that's based on volatility when there isn't an obvious place to put your stop. And that often happens in trending markets. They're moving up really quickly, and you're thinking, well, hang on, the nearest sort of logical, technical support or resistance for my stop is thousands of points away. And that can stop you entering sometimes. So, what I'll do is I'll show you how
Just need
professional
to make you
traders
aware of that
deal
the
with
US
that.
does issue general license allowing some Luke transactions.
Right, I'm just going to turn my squawk off so that that's not going on. Right, squawk is off. Yeah. Okay, so what we're going to be looking for with these trend lines is I'm going to explain to you that trend lines basically define market structure. You have a price that's either above or below a trend line, so it's very helpful like that. Now, there's two ways to define a trend line. There's the official way, right? And then there's the practical way. So I'm going to share with you how to define a trend line according to the chartered market technician strict textbook way. And also, I'm going to show you the practical way. And I also have to say the practical way is also referred to in the CMT syllabus by a professional who had the same observation. So I'll show you just based on my years of trading how to use a trend line with just a couple of touches. There's two main approaches to drawing trend lines. One, we've got to connect at least three swing highs or swing lows. Don't worry, I'm going to show you this all practically on the charts in a minute, but I just want to give you an introduction. Or when you use just two clean, obvious swing points, right? Now, both methods are legitimate, but if you've only got two swing points, as long as they're clean, that's fine. I'll show you what I mean. And this is particularly for that trending market scenario. Okay, really, really helpful. Um, and I'll show you how to draw the trend line for a fast trending market in a very specific way so you can find yourself getting into these excellent trades. And a trending market is one of the most profitable markets. So if you just focused on trading trending markets, you're going to put yourself ahead of 90% of other traders. Okay. And you're going to be getting into those fast, long, hard trends. Like we've been seeing recently in gold and silver, both trades that I've been flagging to my clients, and both very, very strong, profitable trades. Now, what I'm going to do now, this is a practical study. So I'm going to go over to the charts. I'm going to show you a few markets. We're going to look at silver, platinum, Bitcoin, and gold. Right. So first of all, let me show you gold markets. Let's have a look because that's been really, really popular. And I'll show you how to do it. Now, you'll see here that I've taken three symmetrical triangle patterns in gold. And what do you notice? Each one of them, so good for entering. Okay. Now, these are sort of trade setups that I've been having over time. And what I'm going to show you is I'm going to show you how you do it, right? So first of all, you have to know you're in a trending market. So you can see here around sort of February 2024, it became very obvious that gold was in a trending market. And look at the way it's aggressively moving higher, 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 higher. And as soon as that happened, right, what you're looking for is you're looking for a sweet trend line to form across the top of price. And you see here, this is on the daily chart. Do you see how price, right, do you see how price, so you've got one touch, two touch, that's a legitimate trend line. And you see how price breaks out. Um, and when price breaks out, right, you can see that it just moves very, very fast to the upside. Now, if you use an indicator and use something like on balance volume, right? It's available on TradingView. And what on balance volume will do, it'll give you a proxy for volume. Um, here you go. It'll give you a proxy for volume. And use this one here, the one that I've got it with the green. And when you have a breakout of a trend line on volume, that's your signal to go long. So you can see that the trend line breaks. It's a fast trending mark, break above the high, and look where you can put your stop. You see, all you do is you put your stop the other side of the trend line, right? And you see here that was a trend, and you see how it just didn't come back. Price just went up and up and up and up, right? Then this was a big symmetrical triangle pattern, but it's also, if you just think about it, you got a very sweet trend line across the top here. Right, one touch, right, two touch. Now you would rightly recognize that there, one touch, two touch, that would have been a legitimate break. Do you see price broke above there on rising volume and price moved back under the trend line, so you just be stopped out, accept it, right? Okay, I'm stopped out. But if you kept your trend line and then once you had the false break, this is what you should do is make sure you have no price the other side of the um, candlestick, right? So you can see here, right, you got no price the other side of it. One touch, two touch. And then you had another break, right? Break to the upside. Stop the other side of the trend line. Maybe you got stopped out again. Another break, and there you're in the trade. And you see how the trade just runs and runs and runs. So yeah, you might have been stopped out twice on that, but your third time, once you're in it, would have made up for all the others and some. All right. You can see here with that, you're getting 10, 11, 12 risk reward. Lovely trade, right? And here again, right? See a trending market. You got one touch, two touch, three touches, four close enough. And then as soon as you get this, look, you get a breakout on rising volume. Right. And remember, markets were talking about how bullish gold was at this time. This was a clearly trending market. And again, you're in again and you stop just the other side of the trend line and you move higher. Right. And again, you see here. Now, this is interesting because look, you got one touch, two touch. You can see I put a little trend line here. There's a trend line break. Look, but the on-balance volume is negative. So that has less kind of conviction. But if you look here, you've got a trend line break, one touch, two touch, but look, on rising volume. So this is nice, right? This is giving you an indication that even as gold stands at the moment, that's a trade that could be entered now with stops just running under the 4128 region, right? And then that could be a run in, right, to a signal to a similar move to what we've had here. Do you see? Very, very simple trend line break. Now, obviously, the on-balance volume is moving lower, but there was a little uptick that we had there, right? So this is very legitimate, very straightforward trend line break. So what you're looking for in these fast trending markets is just a very clear and obvious place where you can put your trend line. So what you don't want to do, you don't want to be making a trend line really complicated, like thinking you don't want to be looking at this and going, okay, there's one touch, there's two touch there. You could have said, okay, that could have been your trend line there like that. But the more obvious they are, the better. So let's look at a real example at the moment. So let's look at something like silver. Silver's a good one. All right, silver's been in a wicked uptrend. And you can see here, look at this. One touch, two touch break. On balance volume, breaking high, you see? So very, very strong. And what you can do, and so look at this in silver, Frank Victor. If price moves back here, expect a bounce off that level, right? So you'd be looking for price to potentially move back lower and bounce off that level. That's your trend line. Now, your typical way of drawing a trend line, if you're doing a trend line and you're trying to go with a trend continuation, you do it like this, right? You've got your one touch, nearly two touches, three touch, four touch. So that means that then should you get a retracement back down to this level here, you look for buyers there. So that would be the two areas in silver, for instance, you could reasonably expect buyers to come in, right? For retracement, they can have a very tiny stop and try three or four times, right? With a like a maybe like a $5-6 stop. You can trade exactly the same here if you get a remove back to that trend line, right? Just very small stop, and you could try two or three times, right? That way, minimum risk, and you can see already you got risk reward 5, 6, 7 to 1. Um, just like I do with the VIP room, just like I'm doing with the hot zones here. You can see here like a little trade we had at 6:15, just a 4 point stop, right? And a trade earlier that I took that I was flagged up to the VIP channel, just a tiny, tiny stop at the 53 was my entry, and you can see I've got a perfect entry. There was a logic to why that it was that level, 4 5 point stop, took 20 points off, yeah, half the position, got the second half at break even. Right. So that's silver. So there's the relevant trend line there. One touch, two touch, looking for a bounce from that level. And here's the trend line as a continuation. Use on balance volume to validate breakouts. Now let me show you platinum. Okay, platinum again. Platinum has got some really strong seasonals coming up. If you look at the seasonal bias of platinum, from the end of December, right, into sort of February the 20th, roughly, right? Do you see how in the last 15 years, platinum has increased 80% of the time? And look at the average return. It's nearly 6.5% average return. Fantastic. So when we had the last Fed meeting, you see platinum rise. And if you look at platinum at the start of the year, the seasonal pattern, um, again, 4.13%. So you get this. And the thing to notice is how stable the pattern is, right? So if you look at the pattern, look at the standard deviation is 7.97%, but it's tilted to the upside. So yes, it's quite choppy, but it's choppy to the upside, right? So sometimes you get a small gain, sometimes you get a large outsized gain. So it's a decent commodity. So if we look at platinum on the daily chart, do you see here? One touch, two touch. So it means if you get a breakout of here on rising volume, so let's just put the on balance volume in. Yeah. Right. If on balance volume is pushing higher, get a breakout at that level, that could be a great trade setup to the upside, right? In line with this strong seasonal pattern that platinum's coming into from the middle of December. So again, a very practical example. And again, you got one touch, two touch, right? And you can see when you've got these one touch, right, two touch, strong break, one touch, two touch, look for the break, and that break can be a great catalyst, and stops can just be the other side of the trend line. Okay. So this technique is only used for strongly trending markets, and it also works on the downside as well. So you can see Bitcoin, for instance, like if you look at Bitcoin at the moment, um, and one thing to be aware of is Bitcoin, right, often moves in sympathy with the Nasdaq. So if we just overlay the Nasdaq on the chart, you see how Bitcoin prices tracks Nasdaq prices, and that's because a lot of portfolios, Bitcoin and Nasdaq are given the same tech allocation. And so you can see here, Nasdaq, Nasdaq falls, Bitcoin falls. Um, Nasdaq rises, Bitcoin rises. Nasdaq falls, which is the green line, Bitcoin falls. And at the moment, you've got a slight divergence. So you've got Bitcoin falling, but the Nasdaq rising. So that tells you straight away, right? Well, that's a potential reversal here, isn't it? Because you got Bitcoin testing the 100 exponential moving average. You got Harami inside bar, false break of Harami inside bar. Okay, and you got a potential Bitcoin reversal there. Something to keep an eye on. And then you could jump down to the lower time frames and think, okay, I want to go with that reversal on a trend line break. So this is what to do. Just have two touches, right? So you got the one touch and two touch, and you know if that level breaks, it's likely to go higher, right? And again, it works on the downside as well. So if you're in a situation here on the daily chart, one touch, right, two touch, and you've got a break on rising volumes, that's probably sell volume, bearish engulfing bar rejecting that level, and then it sells off, right? So very, very sort of nice areas. And you can see here another major trend line is going to be there, right? Now, I also promised to show you how to set your stop with this. So let's say, for instance, you wanted to take a Bitcoin long on a break of this trend line to the upside. Let's say you're thinking, I'm expecting Bitcoin to recover and I'm looking for the first opportunity to get long. And I've got my super fast trend line here. And what I'm looking for is how to set my stop. So what you use is you use the average true range. Now, this average true range is a volatility measure. So what it does, it shows you how much price movement Bitcoin has on average over the last, I think 14 days. Over the last 14 days, what's the average price move a day? And you can see here it tells you the average price move a day is $3,800 roughly. So you know, on average, Bitcoin will move $3,800 a day. So what you need to do then to set your stop is use double the average true range for your stop. So if the average true range is 3,800, then let's say you get your break, right? And you're going to use 7,600 as your stop, right? So there's your entry, and then your stop will be 7,600. Right? There. And your stop, you see, is double the average true range. And that way, if you're ever unsure of what to use as your stop, you can use double the average true range. Very, very helpful when you don't know, you're thinking, well, do I need my stop underneath that swing point? That's a very large stop, $18,000. Um, no, 7,600 would be enough, right? Because it's double the average true range. So you know that if there isn't a break to this upside and it moves back lower, back through this trend line, back through your stop, it's wrong. Something's wrong with your trade, okay? So the key thing to remember with this is to use this only in trending markets. You want a trend line that very clearly, right, is an obvious level. So you can see here, I've got one drawn historically in here earlier, right? You got one, two, three, four. There's no price the other side of that. And then look, you get a breakout, a false break. So let's see what you would if you'd use your average true range method. So average true rate there is $2,000, right? So let's say you broke out and you want a $4,000 stop underneath that trend line. So you've been here, right? And you get a $4,000 stop underneath your trend line. And you see here, that would have kept you in the trade. And then you ultimately, with that trend line break, you ultimately got into a trade that's like 10, 11, 12 to 1 potentially. Now, I wouldn't have held this all the way like this, but what I would have done if I was in this, I would have trailed my stop, trailed it up, 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 and you could have got an 8 to 1. Now, the other technique you can use is if you don't mind being stopped out, you can try multiple times to enter in a position with a much smaller stop. So you could try multiple times with $1,000 stop, say, right? So, okay, you enter in once, you get stopped out. You enter in again, you get stopped out. But you enter in a third time, right? And you can see then, look, you got in the trade, and your risk reward has now gone up to like 20, 30, 40 times. So if you don't mind getting stopped out, you can get a much better risk reward, just like I share in the VIP channel with the hot zone trades. So I'll try up to 3 times. Don't mind getting stopped out. So you can see the trade at 20 points was like a 4 to 1 risk reward on half of the position. And then I just move the second half up to break even. So if I get stopped out, fine. I've got 2 to 1. But if this carries on, it's like 100, 200 points, you can see straight away, right? Then, you're getting like 20, 30 to 1. Get some fantastic risk rewards. Okay, are there any questions that anyone has? Is that clear, Victor? Is there anything you're unclear on or anything you would
Can you
like?
do the same? Can you do the same with gold and just see how you set your stop loss on gold?
Yeah, absolutely, Victor. So I'll show you how to do it exactly with gold. Now, I'll also run through like a live ex an example I had in my trade room, right? And it was this breakout on gold here, right? To this level. Now, I was looking at this as a symmetrical triangle pattern. See how lovely it is? And the way you trade a symmetrical triangle pattern is you look at the base of the pattern, and then when the price breaks to the upside, you're looking, the target is the base. So there's the base. You're looking to the target, the base. You can see here the target is there. Now, in a structure like this, the stops technically would be just underneath the other side of the symmetrical triangle pattern. But using the ATR method is absolutely fine, right? And is perfectly legitimate. So let's look at it. So here you're at your trend line. You've got your break to the upside. Your break is when you get a break and close. So this is the break and close here, right, on the 28th of August. So price moves higher. You can see volume is rising, the on-balance volume rather. Use the on-balance volume. This works as a proxy for volume, right? Because you don't get proper volume in currencies or commodities and trading view like this. But you use on-balance volume as a proxy. So it's rising. It's legitimate. What's the average true range? The average true range is $41. So that means your stop is 2 to 2.5 times the average true range. So here, your stop can be $80. So long position, $80 from the trend line. And let's just see where $80 is. And $80 is there, right? So just slightly better than the other side of the pattern. And you can see there, look at that. Nice risk to reward, 8, 9, 10 to 1 risk reward. So it's called the ATR, Victor. That's short for the average true range, and that's called basically a volatility stop. And professional traders use it so they can adjust their stop based on the volatility of the instrument. That means that the stop is relevant to recent market dynamics rather than having a fixed stop loss or an arbitrary level. Um, the average true range is a great way to define and limit your risk. You know, if you were very nimble, you could also use 1 time the average true range if you don't mind re-entering. So in this instance, the average move is $40. You could say, okay, I'll take a long position of $40, my stop, and that really does help your risk reward, right? So there you go, $40 from the trend line. And you can see in this instance, it would have worked out. But you could say, okay, I have a $40 stop and I'll try 3 times. So then you see with a $40 stop, straight away, your risk reward, is now like 20, 30 to 1. So you're better off with those smaller stops, but you have to then accept you're more likely to get stopped out. So it becomes a bit harder psychologically, but it's better in terms of pure risk reward. Does that help, Victor? Is that
Yes,
helpful?
yes, definitely.
Yeah.
Just one more question. I see you're using the daily time frame. Is that the ideal?
Yeah. So you can, yeah. You want for swing trading. This is in a fast trending market. I would use the daily um, chart, but you can also use the weekly. That is also completely fine. So you can see here, look, trend line break on the weekly there. So it just depends how much stress you like. You know what I mean? So you can see here, look, you got a weekly break of this trend line here. So that will be legitimate to go right at market as it stands with 155, so $310 stop. So there. you'd be at market, and you probably want your stop $310 from the trend line, right? And then that would be in keeping with the volatility of gold. Now, for me, that's like too big a stop. Like you wouldn't need that. Um, so maybe just like because if price goes back through this structure, you know something's really badly wrong. But you could just keep it like say underneath the breakout candle. Because if price goes back underneath that level, you know that something's wrong. Yeah. But again, using that average true range really helps. And you can see here that is actually like a legitimate signal as it is. So you can watch that and see how it plays out, Victor, right? And you
Yeah.
can use that. But you use these trend line and you can just see it's some of the simplest trades. It looks deceptively simple, doesn't it? But some of my
Yeah.
best trades, I say, have been on this kind of simple trade because you've got a fast trending market. And if you look here, since July 2023, trend line break works, trend line break works, trend line break works, trend line break works, trend line break works. You see? And you could look at this and say, well, okay, is this a symmetrical triangle um, pattern, or is that more like a high tight flag? Right. See, very nice. In fact, I really like that setup. Okay, Victor, I hope that helps.
Yeah. Thanks.
No, you're very welcome. Are you in the VIP channel, Victor?
No. How do we get into the VIP?
The link is on the top of the Telegram channel. So let me show you. So if you look on the channel, I'm just going to show you it here. What I'll do is I'll just do a screenshot so it's really obvious. Right. If you look at the top of the FX Academy channel, you see it says unlock VIP at the top.
Okay.
If you just click on that, I'll tell you the details. The reason I mention it is that I'm going to be doing a course on how to really understand financial markets based on all my years of experience. And I'm going to explain lots of concepts, some of them quite advanced, some of them relatively straightforward, like this one. But it'll be a really good place to grow and to develop. So if it's something you are sort of really interested in, I would recommend that channel. Okay, Victor, good to have
Yeah.
had you
Okay.
today.
Okay. Thank you.
You're very
Uh,
welcome. Any other questions before I go?
no, no, I don't think so.
That's great. Well, Victor, check out Gold and see how it goes.
Yeah.
And I look forward to maybe seeing you in the VIP channel sometime.
Okay. Thank you.
Take care,
Thanks.
Victor. Bye.
Cool. Bye.